Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. If you've been following my Discord server, then you know August 31st, a major storm hit the region I live in. It was considered to be one of the worst storms in a very long time, where 229,000 people ended up losing electricity. The damage was pretty significant, and it really took out a lot of city infrastructure and services. I spent several days without electricity and equally as much without any internet whatsoever. For the sad point of the city, it is recovering. And of course, I ask for good thoughts, well wishes, and prayers for all those who are struggling to progress forward. It is one of the most devastating storms in the entire time I've lived in this area. And that's been over 20 years now. Realistically, though, it highlights something I've said repeatedly. In fact, something I've harped on constantly. When you're dealing with trading, it isn't just your equipment you have to worry about. Circumstances like what I just went through, where I had no communications whatsoever and significant amounts of trades open. This could have been disastrous, except for a worst case scenario plan. I cannot emphasize that enough. You must have a worst case scenario plan. If something happens, you need to know that your bot is going to be able to make its best effort to survive whatever happens. In my case, being without communications or electricity, I had to rely on my bot to carry out all of my trades for me, to be able to execute everything flawlessly and try to do its best to protect my money. That always isn't easy when you're dealing with strategies, and a lot of people tend to rush into the market, not thinking about a situation where something horrible might happen and they haven't prepared for it. Some things you simply can't prepare for, like Robinhood shutting trades down for 8 hours straight. But that is where a worst case scenario plan can help mitigate losses and keep control of the situation. Trading is about risks, but it doesn't mean taking unnecessary risks. It means trying to control the amount of risks you take in a way that is manageable. As we look at this chart, and this is a live chart, we can see just how crazy this market has been, with the upswing, then a massive downswing, then a single daily spike of volume, and the incredible number of trades that my algorithm has put into place. Now, I've made some modifications, thankfully, along the way that deal with one very particular issue with my broker, and that is the net asset value versus the margin available. I've set up a system that in order to protect my account, if my margin drops to zero, my bot will automatically take a hard stop loss of my oldest position, directly and deliberately trying to keep my account from going into a margin call and subsequently a margin closeout. And it will keep issuing these hard, brutal stop losses until I have some margin available. It's a horrible way to deal with the market. But when you're not there to deal with it yourself, it at least keeps you from being completely devastated and losing at least half of your account. Right now, I have 7.41% margin in use. Once the account hits 50% margin, I go into a margin call, and I've got very little time to bring this number below 50%. Having this aggressive system in place makes sure that I get below the margin. And that's exactly what happened a couple of weeks ago when my margin spiked up to 52% and I took those 8 stop losses. The process worked flawlessly, and it meant that my account was protected. Nobody likes to lose money, but it's better to lose a little money in a controlled way than to have your entire account completely decimated. So when you are thinking about your trading, let me make this clear. I'm going to repeat it again. Worst case scenario planning. Always plan for when you can't be there to fix it. Because when something bad happens, you will never be able to get to it quick enough. That's not going to say everything is going to work perfect, but at least there is something in place to help protect your finances. Don't get greedy. Don't let fear drive your thinking. Trade the plan. Plan the trade. That is critically important in that you plan out everything ahead of time before you even put one single penny into the market. Nobody can predict a devastating storm that will wipe out an entire city's electrical system, or any other kind of natural disaster that we see in hurricanes or tsunamis or any other kind of a massive environmental issue. There are situations that have to be thought about carefully, and the ideology that it will never happen to you doesn't work in the real world. We can look on any country at any given time and see devastating weather consequences and the impact that they have on their societies. If you're in trading, you have to be aware of that process. Now, in the case of the market, we can see that the market really took off and the ranges stretched dramatically with a one-day massive volatility spike. And now that the market is turning and correcting again, we can see by the order book that there are trades scattered throughout the entire region. So it's going to take quite a bit of time before this even settles down on both the buy and sell sides. We can even see where the order book volume levels are drastically exaggerated compared to the frequency weighted values that are unusually narrow considering the range of the market. So a lot of dynamics are in play at this particular situation. And it is going to really unfold over the next couple of weeks, I think. Overall, as we move forward with the market, it's going to be a very profitable market as long as you plan for your trading situation. I've made modifications, of course, to my trades, balanced them out a little bit more, and considered the ramifications of what I am actually trading. As you can see from where I moved from a passive approach to an aggressive approach, the passive approach I simply incorporated into my aggressive approach. That way I can maintain control over those positions as well. and they automatically have an impact in a positive way in my profitability. So as we look at the real results, we can see that I am doing quite well with this changeover. It doesn't mean that, of course, I can just set it and forget it and never worry about it. But it does mean that I can at least have confidence that the process I have set up is going to do reasonably well, even if I can't get to it. And that really is the big issue that we need to focus on. Because as we can see from the profits, it is quite generous all the way around, and it has done an exceptional job. Just this month alone, in switching from passive to aggressive, I've already made $7. That's not a lot, but I don't expect it to be, considering I just made the transition. But over the coming weeks, as the process continues to build, I expect it to do what it did with the Australian dollar US dollar combination. And really, considering the volatility of euro US dollar, I can expect reasonably $60 to $80 a month profit just within this approach for the amount of money I have at risk. That's enough to cover my VPS and cover the expenses necessary for maintaining this trading process. Overall, it is a reliable and consistent approach. And that really is one of the undertones to this entire process. Reliability and consistency are critical in trading because that is what provides a sustainable profitability. So as this progresses forward, it's going to continue to do exceptionally well. Long story short, when you set up your trades, think about the situations when you can't get to the computer. For whatever reason, you can't check on it, fix it, or baby it. You need to be able to have confidence in automated trading that your process is going to work the way you expect it to work. Even if it means taking a hard, brutal approach, like I did, and looking at the market, and setting up a worst-case process where if I hit a certain percentage of my margin, I automatically take a hard, brutal stop loss, no matter what the market is at or what my actual stop losses are. If my margin available hits 0, that stop loss is triggered, and whatever my oldest position is taken at a loss, no matter what it is, until my margin is stabilized. That is critical defense risk mitigation techniques that are absolutely paramount in surviving a real market condition. So let me know, how was your trading? What do you think of this incredible and insane volatility? Do you think it's going to last? Or do you think there's going to be a major correction? I personally think there's going to be a major correction. I think there has to be a major correction to balance out this insanity. Just like we saw with the Bitcoin and cryptocurrency markets, I think the correction is going to completely be aggressive and harsh for those that are not prepared. If you like this video, please give it a thumbs up. Please share it for somebody if you think they might be over leveraged or not thinking about the true extent of the consequences of their trading. Leave me a comment, share your thoughts. Thank you for watching, and until next time,